Hey everyone, Ben here and welcome to Motivation to Invest. Yes, this is another Gamestop video, but this video is going to be very different than any other Gamestop video you've watched before. So it's clear that there's a lot of hype behind these stocks right now. GameStop, AMC, Nokia and many more. For example, GameStop is up by nearly 2,000%. However, it's since corrected down and lost over a third of its value after Robinhood halted trading of shares with this platform, only allowing users to sell the stock and not to buy the stock. Now, I think we can all agree, whatever side of the fence you sit on this whole issue, that is completely wrong. Brokerage platforms should just be there to facilitate trading and facilitate investment. They should not be influencing people's investing decisions. So I think we can all agree that is completely wrong. The CEO of Robinhood did come out in an interview and say this was not due to any large hedge fund, which was actually related to the firm, calling up the company and saying, guys, you need to do something about this whole situation. It's getting crazy. They said they didn't have any call like that, and they did it off their own accord to comply with regulations. Now, we don't know who to believe in this situation, and we don't know the true facts, so I'm not going to speculate, but it is clear that there is a connection between a large hedge fund who was short heavy on GameStop, who also invested into Robinhood. So there is a clear connection there, which could influence the platform. But for me personally, if that was the case, why didn't the company just stop trading on those stocks altogether instead of only allowing people to sell? Or they could have stopped these stocks being purchased using margin, which Robinhood was providing. So Robinhood was providing leverage in order to buy these stocks. If that was too much risk for the company, then they could simply have stopped that part of the purchase. So it does seem something isn't adding up here completely.
Twitter don't lie to it, but I don't lie.
Sound like some bullshit to me.
Everyone sees right through you.
Okay.
But in this video, I'm going to do a very different video on this whole situation, and it's actually with regards to the people who first started this whole movement off. Now, what I want to do in this video is make it clear to you guys that there's a clear distinction between those that started this movement and those who are getting into this movement now, or even got into it recently.
Why, I just mortgaged my grandmother's entire home to invest in Tamagotchi. Tamagotchi's about to be to the moon.
They don't have a stock.
They don't have a stock, then who did I give my $68,000 to?
Because there's a clear distinction and a clear risk difference in that situation. And I really do want to highlight that in this video. So I actually reached out to a founder of this movement and one of the Wall Street Bets main guys, and that is Roaring Kitty. Now, crazy name, the guy wears a bandana. You think he's some Las Vegas gambler, but actually watch his investing style, and actually he self-proclaimed and said he is a value investor, and not just a value investor, a deep value investor. So here's a little clip from him.
I feel like some people might join expecting excitement or some day trading, hot stock tips or stuff like that, and you're going to be disappointed because it's not going to be like that. I'll drop this bomb when you're right at the start. I'm a value investor. I'm a value investor. I'm a value investor.
So you can see he's a very interesting guy, and he's not some hyped up Las Vegas gambler.
That's $8,000 in silly bands. What are you looking at? It's the future. Open GameStop.
This guy's a value investor. He's following many of the same principles I've been preaching on this channel in many past videos about finding great companies at fair prices, except the difference with what he doesn't look for great companies.
And of course, you know that means I'm often dealing in shit, right? So a deep value investor, right?
He just looks for real downtrodden companies. This is actually Warren Buffett's original investing style, Benjamin Graham's original investing style, the father of deep value investing. So basically, you're looking for these cigar butt opportunities, these poor, downtrodden, terrible companies which may have one last puff in that cigarette. And that's what this guy actually looks for and actually found with these specific stocks. So GameStop, terrible company. AMC, company going through terrible times at the moment. All the cinemas are closed. Terrible company. So what he found is, obviously, this is why these hedge funds have shorted the company. Shorted these companies because they're terrible companies and they expect the stock price to fall further. Now, the way you make major gains in the stock market is by betting against the consensus. Now, I covered this many times in my principles video. Many of you guys in the VIP group have watched that video. So one of the greatest contrarian investors of all time, was Sir John Templeton, and he was actually investing into the stock market during World War II. So that is when there was a lot of risk and a lot of real risk, and he betted against that consensus and won. And this is what this guy's done right here. So I don't think this guy's an idiot by any means, but people who are getting into this stock now, it is extremely different.
Am I investing? Am I gambling? Whoa! Who knows? Vegas, here I come. Just kidding. My wife won't let me go there.
And I do want to clarify that. I'll dive into this chart now of a bubble. So basically, smart money. They were the people who first decided to invest into the terrible stocks and actually go against the institutions on the other side of this bet. So that's at this stage. This was a smart time to invest into these stocks. So as you get into this stage here, this is where you get into the mania phase. So you get enthusiasm, greed, delusion, a new paradigm. So when people say this time it's different, this is the new normal, this is how you invest these days without fundamentals, then that is actually the point of the greatest risk. In the words of the legendary investor Warren Buffett, be fearful when others are greedy, and greedy when others are fearful. And the leaders of this whole movement actually follow these principles. They don't follow the opposite principles. They're not investing in here. They're not investing at this point. They invested in this point. They invested in these stocks right down here when the risk was actually lower because they got these stocks at a discounted rate. Now, in the Reddit community right now, there is a major consensus, and that is to hold the line. And I do understand exactly what they're saying. They're saying, right, this is a short squeeze. We all need to hold the stocks at the top here, at the point of maximum risk, in order to make sure all these hedge funds have to buy in in order to cover their short position. That's how a short squeeze works. And I do respect that, and I do respect the cause behind this whole thing about the retail investor getting one up on Wall Street.
They take our lives, but they'll never take our freedom!
However, there are some major risks I think you guys should be aware of if you're involved in this or if you're thinking about even getting involved into any of this stuff. So the first major risk I can see is self-interest. So the real difference here is everybody is in their own personal financial situation. Some people have $200 invested into this stock. Some people have $20.
NASDAQ? That sounds delicious. I'll take 2. Medium rare.
Some people have $2 million. Some people have $20 million. Some people have invested their life savings into these stocks, which I definitely would not recommend as it's pure speculation. So you just need to know your own risk tolerance, but know that if you're investing based upon what you think other people are going to do, then that can be extremely risky because you're expecting everybody else to be in the same position as you and see this situation as important as you actually see it yourself. When people are all in their own financial situations, and at the end of the day, when the smart money, the people that started this movement, actually decide to take some profit, but the majority of people will be completely unaware when that does happen, and many people will be left holding the bag. Are you investing? Are you speculating? Or are you gambling? Or are you on a crusade? Now, for me personally, I'm an investor. So on this channel, I'm investing. If I'm speculating, I've got a tiny portfolio which I put into more speculative stocks. I did a video about a speculative stock recently. It just gone public. They didn't have the financial data yet, but I did think it was a very interesting company, very exciting company. There was a lot of tailwinds behind this company, and I did state I'm investing into it. Now, that was a wildly popular video. Many people commented, "What's the ticker? What's the ticker? What's the ticker?" Many people wanted to invest into this company. But the funny thing about that is I'll do a video on a true deep dive company, a great company with great growth prospects, fantastic company, fantastic valuation. Nobody bothers. Nobody even invests into it. Speculation is popular right now, which is a little bit like gambling. For me personally, if I'm gambling, I'll go to Las Vegas.
Money. Get me in this game. Come on.
I don't need to gamble in stocks. Generally, 90% of what I'm investing into is investments. 10% to 5% could be more speculative stocks, which have higher risk but also higher reward. If you're on a crusade against the hedge funds or against the brokerage firms such as Robinhood, which I'm not knocking, just be aware that you're on a crusade. You're not investing anymore. You've changed what you're actually doing from investing to actually being on a crusade. I just think it's crazy because most people don't realize the original people that started this whole movement, they're completely different from the people who are getting into these stocks right now. So obviously I'm not your parents. You guys are going to do whatever you guys want to do. But on this channel, I'm going to keep on researching fundamentally strong companies and investing into companies which I see which have strong value but also strong growth, because I do consider myself the new evolution of investor, which is a combination between value and growth. Two things which seem like polar opposites, and I aim to marry them together on this channel. So there's been many previous investing wins on this channel. You can check out Etsy up around 350%. You can check out Lemonade up around 180%. You can check out Scottish Mortgage Investment Trust 150%. Many stocks on this channel have been mentioned which have gone up to 300%. But the difference with these stocks is these were actually real businesses and the risk was actually quite minimal investing into these companies. So if you guys want more like that, feel free to give this video a big thumbs up if you found any value. If you haven't subscribed yet, feel free to hit that subscribe button, turn that notification bell on. If you want to know exactly which stocks I'm personally buying, selling and investing in and access my entire six-figure investment portfolio, check out that first link in the description below for the VIP membership group. With that being said, I wish you guys good luck, whatever your investing style and whatever you're doing. I hope you guys all have a tremendous day, and I'll see you in my next video. Invest safe.